Happy Friday, guys. It's Rick. Please excuse my voice. I'm fighting a cold here since Wednesday, so if I sound a little nasally or I clear my throat, I apologize now for it. What I'm going to do, I haven't done this in a while, and I'm glad to be back and working with you, is we're going to look at the past week. We're going to review the week that we just had, and then we'll take a quick glance at some other things that I have going on, and we'll look at what next week is all about. And Huskins and I have been talking at length about the way to approach some of the new information coming out, and what I wanted to do was to create a video here for you to have a look at not only the trades that we took last week, but information, economic data that's released, and how we could have looked at this and possibly begin to create some trades from these releases. More of an educational approach than, okay, here's the trade plan, here's the way to look at it, here's what we're going to do. So, to take a step back, we're going to look at a release by date as they came out and compare what happened on the charts, what really happened, and how could we in the future take advantage of some of this information. We're going to start by looking right here, Tuesday, November 12th at 4:30 a.m. Eastern Standard Time. We've changed the times here in the United States. Remember, my charts are 1 hour earlier than that. I'm Central Time US, so my time will be 3:30 a.m. on the UK CPI release. But let's take a look at this. We have the actual was 2.2 percentage points, and the forecast was 2.5%. We had a decrease in the consumer price index of 0.3 percentage points. What does that mean? Well, be careful how we interpret this, because the interpretation of the CPI, as we have talked about time and time again, and as Huskins has taught me, and the more research and more information I gather, the more this holds true. The CPI data and how it's interpreted has to be taken in context with the economy, not only of that country, but of the world. What is the potential to increase or decrease interest rates to control deflation, stagnation, inflation, and what would that particular central bank do in relation to deflation, inflation, or stagnation? I know that's a lot of information, but you can go ahead and Google or search consumer price index, and you can find 100 different articles on, is a high consumer price index good or bad for the currency? And again, it's all in context of the economy of that country and of the globe. So the way we are interpreting this now, we being Huskins and myself, as we see the CPI come out, if it is a negative number, meaning that it is less than, so the deviation is a negative 0.3% on the UK CPI, we interpret that as good. We interpret that as good for the pound, meaning that now I can buy more product, more units in that basket than I could in the previous month. Let's take a look at the chart and see what happened. I have a 1-minute chart, 3:30, November 12th. Yes, I had set this up before, so I wouldn't have to flounder around and draw some lines. Now, I don't know when this came out if you could have caught this, if you could have grabbed this. I believe that when this came out, this spike happened so quickly. Could you have caught it in the second minute as it rebounded and came and took this trade here? Yes, you could have, but I believe this spike came down so fast and then fluctuated in here. Between slippage, between spread on the bid and ask, depending on the broker you have, to enter this trade at this point would have been a very difficult thing to do. Let's switch this to a 5-minute chart. But remember what I said. I said that Huskins and myself interpret this CPI being a negative deviation as a positive for the pound. So let's switch this to a 5-minute chart and see what happened. So let's zoom in on this. So the question becomes, is there a possibility on the CPI of a reversal trade, either off of the 5-minute candle or off of a crossover on a simple moving average, but a reversal trade. I can't answer that just based on one, but as we would go forward, what we would do is look back at any CPI release in which there was a sizable, in this case it was a negative 0.3 deviation from the forecast to the actual, and in this case we had a reversal. And could we have profited from that reversal? Yes. Can we do that on all of these? I don't know, but we have to go and look. So that's one of the things that we looked at today. Let's look at what else happened this week. Scroll down. We didn't do anything with Governor Wheeler. I've looked at that a number of times and haven't been able to do anything. We had the Wednesday at 4:30 a.m. we had the UK claimant count and the unemployment rate. Remember, on the premium content for all subscribers and members, we also had mentioned very clearly to be very careful with this trade, because in 1 hour you had the Bank of England Governor Mark Carney speaking, and that if we were going to take this trade, that we need to be very aware of what happened. So let's take a look at Wednesday at 4:30 a.m. and then at 5:30 when Governor Carney spoke, and let's see what we have. Let's go auto zoom out on this. Let's go to that date and time and see what happened. Right here, let's mark this, at 3:30 is where we had the release of the information on the unemployment claim. Right here is where we had Governor Mark Carney begin his speech. We didn't have any crossover prior to that. He spoke. We did begin to have a crossover. Hopefully you were in tune with this, as we had discussed on the subscribers page, that his words could cause this trade to continue on and not have a solid reversal. So if you did take this, delete this drawing, which we did not recommend to take this, but if you did, you had a bad trade, a losing trade. It came up and never came down. However, at this point you were no longer trading the unemployment claim, but you were now trading Governor Carney's remarks. We're going to look at that as well on the go forward. Now, when Governor Carney speaks, does he have enough impact to continue the current trend, or whenever he speaks, do we see him move and then see a reversal? Again, something we would have to research and then come up with a trade plan for. What comes up next? We had Chairman Bernanke speaking at 7 p.m. that day. Let's see if we had any impact. Let's back out. Let's go ahead and look at the Euro USD and move that till 6 p.m. on mine for that day. Not much impact at all. If I'm looking at this, let me make sure I have the date right, date and time, 11/13 at 6 p.m. Let's verify that. 11/13, 6 p.m. Bernanke spoke, and he spoke. Where did he speak? He had a town hall meeting. So his impact during this period of time was not major. Okay. After that, we had the UK retail sales on November 14th, 4:30. As I recall, this was a great trade. So let's have a look at this one. We had a miss by quite a bit, 0.7% as it relates to the retail sales. Now, be aware on this that what the trade plan calls for and what we got, this number would tend to tell you to trade incorrectly. So let's take a look at this. Let's go find this actual time. We're going to go to the pound dollar. And regardless of which one you took when you were trading this, whether you took the pound dollar, the euro pound, the pound yen, when you took this and followed this trade plan, we're going to zoom in on this. Here is where you would have taken the trade. And looking at this 7:30, you would have brought your stop up because now we know we have a release coming out of the United States at this hour, so you want to be very aware. So it's 60 pips at that point, bringing your stop up to preserve a lot of that profit. And if you had hung on to it, you could have picked up quite a bit, anywhere from a minimum of 40 to a maximum of 80 plus pips on this trade. So it was a very, very nice trade. That's how that worked out. We love those kind of trades. And then the mark that I had here at 7:30 was in relation to the U.S. unemployment claims. Now, this got kind of muddy. We had the Canadian and the U.S. trade balance at that hour. We had the U.S. unemployment claims, also known as the initial jobless claims. We had the preliminary non-farm productivity quarter to quarter, and we had the unit labor costs quarter to quarter. So we had a lot of information coming out at this time. In addition, we had the designate, federal chairperson designate. She is not yet confirmed. Janet Yellen testified and spoke at 10 a.m. So all of this information together should have kept you out of that trade. And if you had decided you were going to look at this trade, let's look at the US dollar. Thursday at 7:30 a.m. on my chart. What did we see and when did we get across? Here's what we had. Let's get a vertical line there, not a horizontal. At 7:30, there's the US dollar. Now at 8:15, 9:15 Eastern Standard Time, we had a crossover, and at that point is where you would look to trade this. That would be at the close at 8:20. So we'll go look at the Euro USD at that same hour. Euro USD at that hour. We also had a cross and close, so it would be to, again, if you had followed this plan and said, I don't care about all the other information that will impact this, you should. You would have entered this trade right here. And you would have, if you had stayed in this trade and not decided to get out, as all this other information. And again, you had Janet Yellen speaking here right at this hour. You were already in a bad position. Hopefully, if you were in this, you had managed it to a break even, and hopefully you didn't take it at all. Just completely stayed away from this trade. What else do we have? Let's talk about what's coming up next week. Let's take a look. Next week, we'll be looking at the monetary policy minute meetings. We may look at that only from a standpoint of how we would approach a continuation trade on this possibility. But we will not be setting up a trade plan for that, nor will we be looking at the German zoo. We have looked at this time and time again and had some major discrepancies on when this came out and how it should be traded. Again, we have Tuesday the 19th. Chairman Bernanke is speaking again, and I believe he's again speaking at a town hall meeting set up for educators. May or may not have impact on the U.S. dollar. We noted that last week, the week on Tuesday, his remarks did not impact the market as in that town hall meeting. We will be looking at the trade on the UK, on this pound, on the asset purchase facility and the bank votes. We will be looking at the inflation report hearings. This could be pretty touchy to trade. We're going to look at it real close. A lot of information, but we'll look at it and see what we come up with on this. We have the U.S. core retail sales. At the same time, we have the core CPI, so we'll be watching these closely. Note that these are late. That's what these stars mean. They were delayed because of the government shutdowns, probably 7 to 8 days late. Hopefully by next month we'll be current and back to normal. Existing home sales comes out. We don't have a trade plan for that, but of course we'll be watching that. The FOMC meeting minutes, we'll be looking at that very closely. Then on Thursday, nothing out of the Eurozone that we will be trading. We will be definitely looking at 4:05 a.m. out of Australia. The Reserve Bank of Australia, Governor Stevens will be speaking. We know we had some great trades on that, so we'll be putting a trade plan together for that. The U.S., the unemployment claims, the PPI, and the Philly Fed manufacturing. And then on Friday, we have the CAD core retail sales. We also have the CPI. This could get a little muddy. We'll look to see if we can't find a way to differentiate between these. I would look more at the core CPI than the retail sales. Canada, while it is a major economy, is not a retail-driven economy. The core CPI will have a larger impact than any number on the retail sales, unless, of course, the retail sales are so far off from what is projected of a 0.4%. No increase or decrease, just pretty much flat as it relates to last month. So assuming that we come in relatively close to that, the core CPI will definitely carry much more weight. One last thing. Thank you all for spending time and listening to me. I just want to talk about one other thing that I've been doing, and Huskins is aware that I am also, again, I was an options trader, and I've gotten back into that, and I wanted to share a trade with you. And if you're all at all interested in learning a little bit about it, send me a note, send us a note. It's always something interesting to discuss when we're talking about some alternate trades and some different ways to approach the markets, not just through Forex, but through some alternate investment or trading ideas. And here we're looking at the Russell 2000 index, a trade that I put on November 5th. The trade doesn't expire until December 20th, so it is a 6-week trade, 7-week trade. We're looking at a weekly chart, and there's I know, don't be afraid, iron condor vertical credit spreads, 2 vertical credit spreads put together, in which if the Russell 2000 does not go above 1155 or below 1035, I collect that credit. If you're all interested about talking about these kind of things or some alternate means to invest, this trade is set up to return 35% on the risk that I have on it. I can actually even increase that return by controlling the risk even further. Yeah, there's some certain things I can do to, if the trade starts to go against me, to begin to exit out of it so that I am not carrying that full risk. So if you're at all interested, let us know. It's good to talk about some other things sometimes, but we're very interested in continuing forward with the Forex and finding some better ways to serve you. Again, thank you for taking the time and listening to me, and we'll talk to you all next week. You have a great weekend. Bye.